The management of Minda Industries. It was a Dhamaka quarter for them, certainly a very good one. They've delivered their numbers. Top line growth of 52%, margins expanded, and not only that, the profits as well went up a good 72%. So let's bring on board Mr. Sudhir Jain, the Group CFO, to understand what went by in the quarter. Mr. Sudhir, congratulations on a great set. Talk to us about the key tailwinds which essentially helped you deliver such strong numbers.
I think the first and foremost reason for this kind of a growth is the investment which we made in last 3 to 4 years in creating capacities both for existing products as well as the new products which we added to our product range. So there is a substantial improvement and growth in switches, acoustic horns, similarly in filters, etc. Plus the new products which we added about 3 to 4 years ago, which is aluminum die casting wheels, die casting components, so that has also substantially grown. So it is due to better capacity utilization of the additional capacities which we created, plus the productivity improvement. But all this has been supported by the auto sector growth in the year. Overall auto sector has grown by about 15% year on year, and when we say auto sectors, we mean all the segments of the auto sector. Two-wheeler, three-wheeler has grown, four-wheeler passenger cars and commercial vehicles have grown, and off-road.
Jain, you just mentioned that auto sector has seen very strong demand spurt, but do you believe it's a sustainable run rate this fiscal as well? Can we expect a similar sort of a growth, and what is the growth that you at Minda Industries are targeting?
Yes, we believe that it is sustainable in the coming year also, and in case you see our past history of performance, that we have grown our top line about double the growth of the auto sector. So assuming that the coming year also the auto sector will grow in double digits, say 10-11%, if not 15%, which it has done in the last year, still our top line should grow by more than 20% in the year to come. So the past history shows very clearly that our top line is growing year on year 20% plus.
The other parameter, margins. Talk to us about the trajectory over there and the guidance for the year.
I think rightly you have put it that in the last 3-4 years our margins have also improved year on year, and as a result in Q4 our consolidated EBITDA is 12% plus. In case you recollect, I have been sharing in the last earlier quarters also since last 2 years that we are aiming at 12.5% EBITDA in the near future, and in this particular quarter we are about 12.4% or so. So we hope to maintain, we target to maintain that in coming year also our EBITDA would be 12.5% on an annualized basis, and we would be able to reach that level in the coming year. And this is again, I will say that there is a continuous drive for productivity improvement into all the plants of our group, and as a result there is a consistent improvement in margins and in EBITDA also, PBT level also, and of course at PAT level also. Higher margin products, yes, the products
you were also mentioning about how the exports business has grown over the years, but past quarter, if you could tell us how the performance has been, and have you seen any market share gains in any of your key markets, and which are the regions seeing maximum traction, if you could break it down for us?
Yes, we look at it from the international business point of view, which of course include exports from India as well as our turnover from our plants located outside India, which is in Indonesia, Vietnam, Spain, Mexico, etc. So there also there is a robust growth. Our horn plant in Clarton is doing well. Similarly, the new facilities was set up at Mexico, so that has also started production. and supplies have started. Second line is also being set up there. Of course, Indonesia and Vietnam plants are working near to the 75-80% capacity levels. So there is a substantial improvement in all these plants also, plus exports from India. But today total international business is about 20% of the total group business, which we are targeting to improve to take it to 25-30% in years to come.
Okay, Mr. Jain, what's the scope and opportunity you see in the upcoming EV space, and are you working with any OEMs currently over there?
We look at EV as a big opportunity. A big shift will take place because of the introduction of EV, but at the same time we don't see that existing vehicles or IC engine will vanish overnight. So there would be a gradual shift towards electric vehicles, for which substantial infrastructure of course is yet to be created. So we see it as a big opportunity in 5 to 7 years from now, and of course we are fully aware and of this opportunity. We have already done our internal homework. We are in touch with the various OEMs who are also working on it, and we will follow the OEMs in this regard and are identifying components etc. For EV. But it is too early. We are at a discussion stage, we are at a drawing board stage. Nothing has been finalized as such.
All right, Mr. Jain, we'll let you go on that note. It's been a stellar quarter and we can clearly see that on the stock price as well. On that note, it's a wrap on this edition of Buy Now, Sell Now. Goodbye from me as well as Mubina. Market Fatafat comes on the other side of the break.